My name is Nick Green. I'm one of the partners of Fat Green Consulting. I'd like to ask you all a question. If you could just think about this for a minute. Let's assume, for argument's sake, that you and your management team have decided to proceed with an acquisition. The acquisition is potentially going to cost you millions of pounds, and it may well require some form of director's personal guarantee. Given that you are about to make a significant investment, which may include some of your own money, my question to you is this: what can you do to protect your investment and help maximize your return on investment? Rachel, can I have the next slide, please? Rachel, good, thank you. No, that's it, thanks. But let me just start, if I may, by introducing Fat Green. Fat Green work with SME business owners and investors, and we help to protect investments by tailoring business protection insurance solutions. I'm the chap on the top. My career spans 3 decades in executive search and in insurance, and I've worked and lived in London, Hong Kong, and now Yorkshire. The lady on the right, Annie Lian, worked in corporate finance with UBS and JP Morgan, and she has lived in China, San Francisco, Hong Kong, and now York. Finally, the chap at the bottom, Peter Blacklock. Peter is our non-executive director, but Peter has lived and worked in the Northeast and specialized in insurance for the last 30 years. So there's very little that he doesn't understand about the insurance sector. And collectively, the 3 of us form the key people who run Fat Green Consulting. We have a very simple strapline. We believe that a business worth building is a business worth protecting. Rachel, can I have the next slide, please? Prior to the insurance industry, I spent 2 decades in executive search. And during that time, I placed senior management as well as board directors into PLCs, SMEs, and startups. During this time, I worked extensively with the finance community, specifically the buy side, dealing with angel investors, private equity firms, and on the sell side, investment banks, who were obviously buying and selling organizations. During this time, even though I was looking at it from the perspective of executive search, it became apparent to me the importance of protecting investments and minimizing post-acquisition downside risk. But both as Andrew Carnegie and Richard Branson will attest to, ultimately, it is people who make businesses succeed. When we consider the impact that people have on businesses, the question I ask you is how can business insurance help protect acquisitions and retain key staff? Can I have the next slide, please, Rachel? So addressing the question of how can business insurance help protect acquisitions and retain key staff, what I'd like to do through the rest of this presentation is talk specifically about 2 business protection insurance schemes. One is Key Man Protection, which is designed to help protect your investment, and the other is Relevant Life Protection, which helps increase your staff retention. I have the next slide, please, Rachel. No, back one, please. Go forward. And forward again. Sorry, it looks like you're missing a slide, Rachel. Should be one on Key Man Protection.
No, that's all we've been sent.
Okay, all right. If you can go back to the Monopoly slide, please. Sorry about this. So what I'm going to do now is talk about key person protection. The loss, in my experience as a headhunter, the loss of a key person following death or critical illness can severely impact operational stability, revenue, and ultimately your investment. I witnessed in my career how the sudden loss of a key person can result in business destabilization or worse, collapse. And just to put this into perspective, Legal & General estimate that approximately 50% of SMEs fail within 1 year of losing a key person. So the importance that we place on key people and businesses is absolutely paramount. But what happens if you find yourself in a position where you lose a key person? Ultimately, access to capital following such events can often be the difference between business continuity or failure. However, as a business owner myself and having worked with SMEs, I also know that accessing capital is a perennial challenge for many SMEs, specifically when you've just lost a key member of your management team. However, if you do have key man insurance in place, at least you have peace of mind knowing that key man insurance will provide you access to capital during a time of crisis. The value of the cover is obviously predetermined, and in many cases a reflection on the valuation of your business, and it is structured to protect the value of your investment and your business. Now, should you find yourself having to make a claim on your key man protection, the capital can be used in that time of crisis to support finances and operations, as well as potentially fund a replacement or an interim management solution should you need one until you find a permanent replacement. Obviously, this helps plug a gap, and ultimately, in many cases, it can prevent the business from entering into a significant period of destabilization. But I believe that such actions project a message of a progressive management team who are in control and capable of managing their way through a crisis, hence preventing their business from being another LNG statistic. When we take a step back to reflect and consider the cost of acquisitions, key man protection premiums, in my view, are a very small price to pay if it means the difference between your business succeeding or failing. We can now move on to the next slide, please. I now want to talk about the second piece of business protection, which is used by HR teams in particular to help retain people post-acquisition. And this is obviously relevant life protection. In 2000, JP Morgan acquired Jardine Fleming. Now, at the time, I was living and working in Hong Kong, and I had friends who worked at both Jardine Fleming and also JP Morgan. Within approximately 2 years of the acquisition, about 80% of Jardine Fleming staff in Hong Kong had left the newly formed JP Morgan Fleming. Now, I'm sure many people in the financial services community consider the acquisition a success. But the question really I think we need to ask was the return on investment maximized, or could it have been more profitable if the staff and the intellectual capital had been retained? Now, I know from my experience as a headhunter that retaining quality staff is never easy. So post-acquisition, how can you, the acquirer, retain the key persons that you wish to keep in the newly acquired entity? And I know Richard touched on this earlier, but actually retaining that intellectual capital and that knowledge base with a perspective of continuity is absolutely critical to the success of many acquisitions. There are many ways that this can be achieved, but one option or one solution is to enhance long-term employee benefits, because ultimately by enhancing your long-term employee benefits, staff feel more valued, and when they feel more valued, they tend to be more loyal. Increasingly, what we're seeing is that progressive employers are offering staff relevant life insurance. Unlike group service schemes, which offer one-size solution fits all, relevant life policies are tailored to individual requirements. As the employee pays the premium, staff win because they're not paying for their life insurance by their taxable income. The business also wins because the premiums can be offset as a cost, reducing corporate tax exposure. So I would argue that benefits such as relevant life protection leave staff or leave the core team of people that you want to keep feeling valued. It ultimately helps to enhance loyalty, and ultimately from a management perspective, they get to retain the key people in the business who really can make the difference. Can I have the next slide, please, Rachel? I'd like to end this story this presentation by telling you a quick story. I'd like to talk about a chap called Peter Rosengard. Peter Rosengard is listed in the 1990 Guinness Book of Records. And Peter's listed in that 1990 Guinness Book of Records because he sold the world's largest life insurance policy, which at the time was valued at about £100 million worth of key man insurance cover. The cover was arranged for David Geffen of Geffen Records. Geffen Records had recently, or back in 1990, was acquired by MCA Universal for $550 million. Following the acquisition, Peter Rosengard contacted Sidney Sheinberg whilst he was on holiday in Florence. Sidney Sheinberg at the time was the president of MCA. He managed to get put through to Peter Sheinberg by making up a fake alias. Sidney Sheinberg was in his room in the hotel in Florence, and before he knew it, Peter Rosengard was put through to him. After congratulating Sheinberg on the acquisition, Peter Rosengard asked Sheinberg what would happen to MCA's £550 million investment if David Geffen of Geffen Records was hit by a truck tomorrow. Now, like Richard Branson and Carnegie, Sheinberg understood that he was not just acquiring a brand, the clients, and the ongoing business. Sheinberg understood that people energize businesses, and therefore MCA's acquisition of Geffen Records was as much about the people as it was the business. Ultimately, Sheinberg convinced his board to arrange key man insurance cover, which came to £100 million. But as you know, in the bigger scheme of the acquisition, which cost £550 million, the premiums were just a small drop in the ocean. But at least you knew that in the event of death or critical illness, they would have access to capital and be able to reclaim some of their investment. Can I have the next slide, please? So I just want to end this presentation now by highlighting those two key points, because I believe that business protection is often overlooked by people. But the one thing I've learned is that we just never, ever know what is around the corner in life. So with that, I'd like to thank you for your time and remind you that a business worth building is a business worth protecting. Thank you very much. I'm now going to hand over to Richard for any questions.